Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, October 6th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Right now, a very narrow range heading into the RTH Open. We have the NFP report here coming out shortly, 1 hour prior to the RTH Open. We also have unemployment rate in addition to other key economic data points coming out, average hourly earnings, for example. We have Fed Waller speaking at 11 a.m. Central, but NFP is going to be the big report to watch here early on. And given the downtrending nature, very bearish downtrending nature, you want to watch the previous session's highs. A failure above two-day highs could open up an outside day down, and that could also lead to another stop run day situation. So basically this pattern here looks very similar to what we've seen here, or perhaps even here, with the next day leading to heavy selling pressure. So again, if there's a failure up here, it could lead to a big time push to the downside. Bulls really want to push prices through the 43.20 zone and start to open it up to the upside, which could lead to a return back toward 43.65. All right, let's take a look here at the NQ. Right now, 33% of average range for the NQ, super narrow range here, 85.75 points of range. This market's been averaging 260 on a 10-day and 290 on a 5-day. So the last 5 days here averaging 290 points. A lot of range right now, very narrow. This range is also a narrow 2-week range here as well. Narrow 2-week range, which could mean the next couple of weeks could be increased volatility. Want to keep an eye on which way we go here today. If there is a rejection at 2-day highs, we could be looking at a drop within the range. A drop within the range. Today's range could be somewhere north of 300 points, 300 to 350 points of range today, perhaps even more if we really start to see a little bit of expansion. If we do see a move to the upside, watch the previous week's high. That could offer an opportunity for bears to defend. Looking at crude oil, this one's down about 1/3 right now, still steadily dropping here. Nearly looked like we had a very strong low in development yesterday, and it really looked like it was starting to come together nicely, and then a hard rejection occurred above 84.50. That was a hard rejection that led to a close near the lows of the day today. Narrow range heading into the RTH Open, 44% of average range. Steady sell-off, steady sell-off. You recall on this day, we mentioned that could be a blow-off top. Watch the next day for a failed new high, which could swing us back to 88s. That happened fast, and then some. Big time move. We are now back below 84s at the moment. That is huge right now, especially when you take into account the market structure that we've been following. Market structure here at 84 across the way looks like this. 94, as you know, is up here. 74 would be the next one down, which is about right there, and then you have the 64s down here. Those are your 10-point distributions right now. To fail through 84, for example, if we were to come up here and really reject, that opens up the potential to drop as deep as 74. You have VWAP from a year-to-date basis at 77.5. That's also the recent support. So if we're going to continue downward, 77.5 could be the next quick target ahead, especially given the distance between the recent pivot high and value. That could be a reversion to the mean here ahead. So again, very bearish right now. Any pullback could be a selling opportunity, especially any pullback into 84 to 85. Looking at gold futures, this one had a steady drop here from the 1950s, compression here. We mentioned at the time that we could be looking at about 120 to 140 point move away from this zone as we were coiling up tremendously. And from 1950, we dropped hard for a good 120 points, dropping into the 1830, 1820 zone. Narrow range all over the last 4 days, like extremely narrow. And we're sitting right at the previous year's close price here, but support for the year is a little bit lower. It's this blue line right there, support for the year. That's also a 5-year value. So if we drop into this zone, that could provide an opportunity for bulls to defend for a little bit of a pullback. But right now, any bounce could be seen as a selling opportunity for a continued flush until we find a strong low. So big time compression here. Any pullback that's met with resistance could be looking at an opportunity to sell it for new lows up ahead into 1800, maybe even below, until we can find a strong low. We do have S3 down here on a year-to-date basis. That could be a big time undervalued area that could eventually lead to a snapback to value up ahead. So watching for a flush that could give us a snapback down the road. Lastly, looking at the YM. The YM here sitting at lows after a big time sell-off. Big trap right here occurred at the key range high, dropped it to the key range low, failed at the key range low, trapped again at that price, and dropping down toward the 100% target. 100% target is 33,005. 33,005. And we got to as low as 33,021 yesterday, or 2 days ago rather. So right now, almost at that level. For all intents and purposes, we got there, but for the most part, we could still hit that level. We've been trending downward here, and typically speaking, these modest pullbacks can be an opportunity for bears to defend and drop this thing another leg down. 32,750 to 32,800 could be the next key level down. 32,800 is the 32.8s. 32,750 is about that recent support here. We failed at 33.8, and here's your 33,750 level. That's the zone here, and to fail at that level and continue trending down suggests we may need to go flush out into those lows. If we do hit those lows, it could be a great bounce back opportunity. So right now, again, watching the previous session's highs, watching for signs of failure, which could lead to an outside day down. In order for bulls to come roaring back, you really need to see a push through 33,500, which could open up a retracement back up above into value from below. And if after you've taken value offered and you come back for a retest from below, it could be offered yet again. So right now, this market in a very, very bearish short-term trend, very bearish medium-term trend, and until proven otherwise, any bounce could be an opportunity to sell unless the market can prove otherwise. All right, that is it for now. We'll see how this develops here as we head into the NFP report. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.